There are a lot of misconceptions in the trading world when it comes to which trading habits actually move the needle and build your career, and which don't really do much except make you feel productive. Other habits are just a form of straight up sabotage and actively set you back. Now, as a professional trader who's been trading for a decade and makes 5 figures a month, I've been through every single habit and every single phase a trader could possibly go through multiple times. And let me tell you, not all trading habits are created equal. So in this video, I'm going to rank the most common trading habits from habits that are so effective they might as well be cheat codes to trading habits that are actively sabotaging you. As in, if I wanted you to fail on purpose, I'd tell you to follow these exact habits. So let's get right into it. And just a quick disclaimer before we start, this isn't financial advice. This is just my opinion, and it's for entertainment purposes only. Number one is being on the screen for multiple hours a day. This is one you hear a lot. The belief is that by being on the screen for multiple hours a day, especially 4 hours and more, that you'll be naturally accumulating more experience, and therefore you'll be able to trade better. So, this is going right into the sabotage category. The issue with being on the screen for multiple hours a day is that it wears you down enormously. Your mental capital is extremely important, and this is constantly getting drained if you waste all of it staring at your screen. You're also exposing yourself to lots of psychological errors like tilt, overtrading, revenge trading, and the rest. The longer you stay on your screen, the more of a chance it has of appearing. Now, the argument against this is that you'll gain more experience and get better at trading, so it's worth the trade-off. And this is simply not true. You could be trading 2 years with low screen time and trade way better than someone who's been trading 10 years with lots of screen time. Screen time alone doesn't make you any better at trading, not even a little bit. There is absolutely zero benefit in watching price action because price action doesn't have predictive power. You could watch charts for 10,000 hours, and you won't be able to predict the market's next move any more accurately than someone who has 10 hours of watch time. Actually, I talk about this at length in my previous video, and what to actually do instead of staring at the chart all day. I'll link that here for you to watch later. But yeah, being on the screen all day is a terrible idea. If my worst enemy was trading and I wanted him to fail, I'd tell him to be on the screen all day, every day, and to just be patient with it because his time is coming, although it absolutely will not. Next, we have paper trading. This is something I did for a long time before I moved on to trading with real money, and the experience was terrible. Paper trading did not give me any preparation whatsoever for the emotions that came from trading real money. I felt like I was trading like a pro, but when it came to real money, I was a complete wreck. It was literally the exact same strategy and the exact same charts, but I just couldn't adjust. It did take a bit of time, but I ended up adjusting later on. So, is paper trading harmful? No, I wouldn't say that. Paper trading is great for testing strategies and getting reps in without experiencing damage. I'd say it's a good stepping stone to understanding a strategy and trading it properly. It's only bad when you use it as a crutch instead of outgrowing it and moving on to real money. That's when it might become a problem because nothing can prepare you for real money except for real money. Even with funded accounts, which seem to be a kind of in-between of paper trading and real money, because you're trading simulated funds to get payouts, it still doesn't work. You still end up treating it like real money. Your brain can't be tricked. If there's real money involved somewhere, your brain's going to sense it and move you from paper trading mode to real money mode. And that's how you're going to trade. I wish there was a workaround to this, but I haven't found any. So I'm going to put paper trading in the good tier for that reason. It's great to practice and test, and I encourage it, but it's not going to take you much farther than that. Next, we have journaling. Now here's the thing. It's not that journaling is necessarily a bad thing. It's just that there are so many better things you can do with your time. Because let's be honest, we journal to feel productive, but it doesn't mean it actually improves much. I mean, you already know what you did wrong. Writing down, I got emotional and revenge traded for the 47th time is not what actually fixes the problem. It ends up becoming a crutch and just reflection without any action. And honestly, if you have a proper system, there's nothing to journal about. Your trade either met the conditions or didn't, and you either followed the rules or you didn't. You don't need to be reviewing your stats and your thought process and writing everything down. If you want to actually change your results, then change your trading. Just commit to following a proven process and keep committing until you're fully aligned with it. That sounds oversimplified, but that's all there is to it. Now, I'm not saying you shouldn't journal at all, but it's not something that'll really move the needle. So it's going into overrated. Next, we have backtesting. This is going in the past and testing your strategy out. And the thing with backtesting is that you gain a lot of data in a very short amount of time. So you're testing hundreds of setups and watching how each of them unfold. You're compressing months and sometimes years of data in a few hours of time. And outside of actually trading, this is the only way to know if your edge is real. This is absolutely critical when you're trading in real time, because when we're trading, our emotions are much stronger than we expect. That's why we end up in situations that seem ridiculous when we look back on it, almost like we were in a trance. And in these moments, when you're doubting a trade or doubting yourself, backtesting might be the only thing that makes you hold on, because the market will try its hardest to deceive you. But if you've seen hundreds of setups play out, then you'll have the confidence to trust in this setup. You've already seen the movie. And this is super critical. It's not about hope and thoughts anymore, it's about real data. So backtesting is going into the excellent tier. You can't backtest enough. I highly recommend it. Next, having a trading plan. So before the market opens, you preview what the market could possibly do and make a plan around each possibility. And that's going to be things like, if the market does this, then I'll do that. If the market does X, then I'll do Y. Now, this is great for a number of reasons. The biggest problem when trading is that the market deceives us and our emotions get the best of us. But if you've made all your decisions before the market opens, then it's very hard for the market to get to you. That means when you're trading, you're not thinking. You're just waiting for your conditions and executing. You made your plan when you were calm and had a clear mind. So that plan is probably your best shot. All the emotion you'd experience when you're trying to figure the market out is gone. So you're not reacting to the market, you're waiting for the market to come to you. And this flips the tables and gives you all the power. You're in a completely different mental state. Having a proper trading plan takes you from basically an emotional gambler to a machine in an instant. It's extremely powerful. It's going in the cheat code tier. Next, we have following other traders while trading. So this could be things like live streams, signal services, and everything of that nature. Now, although it might feel like you're learning something or gaining experience, you're actually just becoming dependent on someone. You win and you don't know why. You lose and you don't know why. You never end up building the emotional resilience that you need to actually grow and trade properly. You're never forced to carve your edge. I mean, yeah, you could get short-term wins, but that time and energy invested in yourself would probably get you much larger wins long-term, right? Once you think about it that way, it's not even comparable. The key is to always hone your own skills because you are your strongest weapon. So this is going straight into the sabotage tier. Next, trading only during predefined hours. The market is not the same at all hours. It will be completely different at 2 a.m. than at 10 a.m. You won't get the same opportunities. Now, this doesn't mean there won't be any trading opportunities outside of a few predefined hours. But that's the trap. If you're constantly on alert and scanning for opportunities all the time, you'll get serious fatigue. Everything will end up looking like a potential setup, and you'll end up overtrading or boredom trading. You're wasting precious mental capital, which could be used when you actually need it. So let's say you're trading ES futures, which is open nearly 24 hours a day. If you tried looking for opportunities all the time, you'd get a few decent trades, and also invite a lot of bad ones. What works well is setting up predefined hours, let's say something like 9 a.m. to 1 p.m., and only trading during those hours. The rest of the time, your screen is off, and you couldn't be bothered. You're not looking at the chart, you're not looking at the news, you're not looking at anything market-related. This is what preserves your energy and keeps you sharp long-term. This is super underrated. It's going into the excellent tier. Next is following the news or checking the economic calendar. So here's the thing I learned about the news. I thought that I needed to understand what was happening in the world to trade well, but I didn't. All you need is already on the chart. You need a solid risk-reward ratio and a good win rate, and you're profitable. That doesn't require understanding the economic calendar or really anything outside of what's happening on the chart. Most news doesn't move the market. And the times it does, it's impossible to predict. News might even give you an opinion. Let's say some good news came out that makes you feel bullish. Well, now you have a bullish bias for absolutely no good reason. The chart could very well be extremely bearish. Opinions can be dangerous. Protecting mental capital is always key. So I'm going to put it into overrated. Next, having a morning routine. So this is mainly about what you do before you trade to get your head right. And this is good to have, the same way being well rested is and being hydrated is. You want to be in a good place health-wise because it benefits everything else as well. But the issue in the trading world is that, just like journaling, there's too much emphasis placed on it. It's a little weird because it makes it feel like we're doing a performance sport. If you're a professional swimmer or something, then your routine is extremely important. But in trading, it isn't. You could wake up, grab a coffee, and just trade in your pajamas. Your system should do most of the heavy lifting already. You're just there to execute. If you feel like you need to perform, then you're probably not trading with the right system in place. You don't want to be grinding it out. So a morning routine is fine, but it's not something necessary to trading. I'll put it in overrated. Next, monitoring your trades. So this is one I see a lot. A trader will enter a trade and then watch it all the way until it hits either their stop or their target, or until they interfere with it. Watching the price all day is literally giving your emotions a front row seat. You're stressing over the price the entire time. Even if you do nothing but watch, that's just an unpleasant feeling. And chances are, you'll interfere. You'll cut a winning trade early or double down on a losing trade, or exit and re-enter the same trade multiple times and get paper cuts. There's nothing good that comes out of watching your trade. Even if you interfere with your trade and get a win out of it, you're teaching yourself that you can't trust your own process. And that's the best case scenario. Most of the time you end up over-trading or revenge trading and ruining your psychology. This is straight to sabotage tier. Don't monitor your trade, just trust the process. And by the way, if you struggle with this, I made a free guide called the Tilt-Proof Trader. It breaks down exactly how to stop self-sabotaging and actually stick to your system. I'll drop the link in the description below. Next, pre-market analysis. This is preparing for the market open by usually doing tons of analysis and setting up your day. So here's all I have to say about pre-market analysis. There are times where I've woken up at 9:27 a.m., got to my desk at 9:29 a.m. to trade the 9:30 a.m. open, and traded it just fine. Doing tons of pre-market analysis is just trying to control something you don't have control over. It's mostly redundant. You don't need pre-market analysis with the right system in place anyway. Overrated. Next, setting alerts. This is when you have your screen off and set your alerts at key price levels. You only engage with the market when those alerts get triggered. So remember, giving our attention and time to the market takes power away from us and makes us weaker. That's why protecting mental capital is so important. And setting alerts is the #1 thing you can do to protect your mental capital. You save your own time by not looking at the chart and remove temptation completely. You're physically limiting yourself from doing the things that ruin most traders. You don't need willpower or discipline, both of which eventually fail. Instead, you just have structure. It turns trading into a simple yes or no filter and makes it mechanical. This is extremely powerful. It's going straight into cheat code tier. And finally, following Tradewriter's advice. This is going straight into cheat code. It would go even higher if there was another tier. Controversial? Maybe. Accurate? Absolutely. But anyway, be sure to grab the Tilt-Proof Trader Guide because it's super helpful. And as always, be sure to like and subscribe, and I'll make more videos like this. See you in the next one.